All right, hope everyone's doing well. So I'm going to discuss the E-mini, but I'm really going to be looking at the micro E-mini contract, which if you're on TradeStation, that is the at mes.d. I believe it's all of them are at they're mes. So just like the E-mini, if you want to look at the actual, you cannot trade the continuous contract, the at mes.d, as you can see right here. However, because it just automates to the current contract. So if I actually wanted to trade the actual micro, I would obviously just type for TradeStation at mesm19.d. And as you know, and you can see, I have stuff drawn on here. I'm going to go ahead and take all that off. And of course, as always, for the ES or for the micro futures of either the NASDAQ, the NQs, which is the NQs, or the E-mini, there's the Globex session. Here's the ES Globex session, or the MES Globex session. And then, but anyways, I'm just going to use the mes.d to discuss the past few days. I really think that you've heard Al obviously mention, but I really think the micro futures are going to be a great thing. And even if volume's a little spotty, which I don't think it will be all that much, I certainly think it's going to pick up, to say the least. So anyways, I'll start with Friday. So Friday we had a gap down below yesterday's low over here. Strong big bar one. And actually I do want to see one thing with that. I want to look at the Globex session. Yep, there you go. So yeah, that's really interesting. We actually yeah, I guess you consider we did. Depending on how you look at it, I guess I'd really consider this the yeah. We actually ended up going above the range. So Al says which I do believe, there's a 90% chance she'll go either above the high or the low of the Globex session during the day session. And you can see, here's the high of the Globex session. I mean, really, arguably it's over here because this is when the next day started. But, either way, I'd probably say here. It doesn't matter. What's interesting to me, though, is this bar over here was actually part of the Globex. So we did not go below the Globex session here. But you don't have to know that. If I just look at the I keep forgetting, if I look at the EMS.D, and as you can see, again, this is the micro E-mini day session, continuous contract for June 2019. So we had a channel down, gap down below yesterday's low over here. Consecutive bull bars, but tail on bar one, and then a tail on bar three. Decent chance you're going to fall below the low of bar one and close this gap. If you were in the room, you heard Al mention that we've had a lot of bull bars with, basically just trend from the opens, here, 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 here. So Al was assuming we were going to fall below the low of today, which I think is very reasonable. And you can see we obviously tried to at the end of the day. And, that's great to know. That's important to know. It's helpful. However, you don't fully have to know that. So bar one, probably always in long, like I said. I'll go ahead and draw it. We're gapping below. We're trying to break below yesterday's low. And we tried twice. We tried obviously here and two more times here and here. So always in long, bulls can, you can arguably, a scalp trade, one you can do is buy the close. Betting will trigger the bar, putting your stop below. Rather different, it's kind of iffy. It's probably okay, but the one thing you want to make sure of is that you're able to re-enter. Although even though buying here, they did the same thing. So bar 1 and bar 2, it's always in long, but bar 3 told you there were scalpers. Traders bought this close of bar 2, and scalped out. They bought again, scalped out. So it is a micro double top, but it's below bull bar, so probably buyers below. So not really a great sell. 50% pullback, probably buyers down here. Low one short, but you can see we closed the gap and bulls bought below the bar. So for always in, traders probably buy the close, buy above bar 1, close at bar 2. Probably better to wait for buying the close of bar 2. I think a lot of bulls that bought the close of bar 1 would scalp out at the high or a little bit above. Buy the close of bar 2, stop below bar 1. Tail on this bar, not really a great reason to get out. You can see this is the low of the prior day. Better to hold. Surprise bar may get a small second leg down, which was here. But again, no reason to get out for always in. It's okay. Now, it is okay, don't get me wrong, to get out a few ticks below this bar. Maybe 4 ticks below, 5, 6 ticks below. But for true always in, you buy, stop down here, probably don't get out. If you did get out for any reason, certainly no reason to go short. Big bull bar closing on its high. Bulls have to get long again. It's a surprise. Probably going a little bit higher, stop down here. Follow through bar, breaking above the moving average, probably going to close this gap. And strong, and again, this is now a surprise, so probably going to have a second leg and maybe a measured move up. And you got to be thinking yesterday's close is the target, so we might get there. At least we'll probably try to. Follow through bars, but tails, dojis may have a deep pullback. Probably will close this gap. In hindsight, we really did not. It's at least a negative gap. So you have to be thinking about this. Go ahead and delete it. Always in long, no reason to get out below. Probably buyers at this low, scaling and lower, just as there were buyers at this low, scaling and lower. However, a little tricky to buy that low, because to buy the low bar forward, just because of the fact that it's the open, you may get a reversal and a deeper pullback than you would like. If you are buying this low, you need to stop down here. And better if you can buy more, maybe at the prior day's low, which Al actually mentioned that during the webinar. He talked about, he said if you're buying this low, better to be able to buy down here because we may get down there. And he mentioned that he was not going to buy the low. So again, no reason for the bears to get out. No reason for the bulls to get out. Bulls buy above. If they did get out, maybe they buy on the high of this bar. And then you kind of have a wedge top. You can call it a micro double top. 1, 2. It's 3 pushes. 1, 2, 3. It's also consecutive buy climaxes here, here, and here. You're failing to break above the highs. You're far above the moving average, so probably reasonable to get out below that bar or several ticks below. Or on the close of this bar, you may test the low of this bar. This may be exhaustion. You may test the high of here. You have a breakout point. So, and when you expect, and it's also a wedge, 3 pushes. As I said, parabolic. 1, 2, 3. And I don't know if I'd really call it parabolic, but I would certainly call, you could say here, here, and here, 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 and here. Either way, it's consecutive buy climaxes, and bulls will wait 10 bars and 2 legs. Yeah, so like I was saying, bulls will get out, and if you think about it, they're going to wait 10 bars, 2 legs in general, and they want to see what the bears can do. So, as always, they see parabolic wedge. They obviously want, they don't want to see this. They want to see sideways. So when they start to get, good entry bar for the bears, bad bar, doji, but then we start to get a micro channel, and now the bulls are saying, okay, this is a problem. You had buy the closed bulls, lots of tails, it's a micro channel. These bulls should be able to get out. However, arguably they had one chance right here. So now it's more of a trading range. We went below the low of this breakout point. Bulls, it's tricky. Ideally, you have buyers at the low, the breakout bars, when you fall below them, betting on a trading range. However, if you get this, which odds are there will be buyers. You may not have buyers. It may take a while for buyers to come in because they'll expect a second leg down, and the first reversal will be minor. So you'll have sellers selling at this high and higher, betting on a second leg down. Probably big up, big down, sideways. More down, but low one short at support below the moving average, and we haven't been below the moving average since over here. Probably buyers. This buy is tricky because you may fall all the way down here. It's a micro channel. So just as we had a micro channel here, there's probably, well, let me say it this way. Just as we had a micro channel here, there's probably buyers below and more up. So just as we had a micro channel, since we have a micro channel here, probably sellers above. The reason why we didn't have immediate buyers below here is consecutive buy climaxes. So you're getting a micro channel late in the move, at least 20 bars into the move or into the trend. But who knows, if we get a big bull bar, traders will buy. Doji, bad follow through. Bears, some bears will buy back shorts, others won't. 3 consecutive bear bars, first reversal up should fail. But let's see if the bulls make money. Well, notice that the bulls did not make money there. 3 consecutive bear bars, probably going lower. However, again, you're at support. 50% pullback. You're in the buy zone. Traders will buy down here. Where are the strong bear bars closing on their lows? Where's this for the bears? We're not getting it. We're getting, this kind of price action. So low one short, probably buyers below, probably will close that gap. Probably will come back up to here. It's a reasonable buy. Traders will buy there, buy more lower, get out. Second entry buy. Second entry buy. Arguably, well, 2 things. I think we're getting up to here for a few reasons. Number 1, bulls will buy here, scaling lower, get out of break even. Number 2, buy the closed bulls. Probably will not buy above this bar. Some will, but I don't think most will because it's not really a high probability buy. It's a tail on top. It's following a micro channel. I think others will wait for a second entry, either above this bar or this bar. I'll choose this bar since it's higher, and obviously if you bought above here, it's still around the same price. So I think at a minimum we're going to get around here. So bulls buying, always in bears. Let me go back. Some always in bears will sell in here. Kind of tricky. You're selling what's probably a pullback, so not really easy. And if you do sell, maybe you get out above that bar, but where do you get short again? I personally would not. Bulls buy again, betting that we'll get up to here. They're hopeful we'll test all the way up to here, but may not. So not a great stop entry, decent follow through, but will we get another decent follow through bar? Will we get a bar like this? Then we're more than likely going up there. And doji. So think about that. Bulls had a strong signal bar. Bulls had a strong entry bar, but bad follow through. What does that tell you? Well, look what happened here. Strong bull bar, another strong bull bar. However, it was a smaller bull bar, but it was stronger. Bulls are not buying into closes. They want to buy pullbacks. But it's, again, you have a double top here and here, 2 legs up. It's a bad low one short, bulls will buy. You can argue second entry short on a smaller time frame, but it's a micro channel, probably buyers below. If always in bears, do always in bears get in? Probably not. I still think we're going up to here. Always in bulls, probably stay long. And more up, but we're getting bad follow through. Wedge top, close enough to the target. I think a lot of always in bears, well, if this would have closed on its low, a lot of always in bears probably would have gotten out. However, it didn't. Probably going a little higher. Tail, another tail. I think we're going to get a pullback. So I would just get out of shorts if I was trading always in. Tight channel down, probably minor. May have to test all the way down here. Form a major trend reversal. There's the give up bar, but what will the follow through look like? Will we get more, will we get this, or will we get this? and sideways. Bad reversal bar. Well, so think about it. You had a spike, pullback channel, spike, pullback channel. We're in a trading range. Most channels evolve into trading ranges. Just ask this, arguably here's a breakout, another breakout, pullback. So just large trading range. Keep yawning. Not really a great buy in the middle of a tight trading range. Plus your stop placement's kind of tricky. If you price falls below here, probably buyers below. So I wouldn't buy here. It's bulls will get out. Probably not interested in buying this high in the trading range. And you can start to see we're going sideways. So kind of breakout mode, triangle, 1, 2, 3, 1, 2, 3. Really doesn't matter. It's tight trading range. And often when you get tight trading ranges, let me explain this for a second. So very often a trading range is usually in the middle of something. So whether that is, here's the low, here's a trading range, basically the high. Maybe I could say, okay, here's these lows, here's a trading range, here's basically the high. A trading range is an area of agreement. So what you have to wonder is, okay, here's a trading range, here's around the middle. The bulls obviously want the bar to close on its high up here on the day session. The bears want to get down to here, bottom of a channel, and maybe below bar 1. So, we're in the middle and the market's deciding where are we going. Double bottom, but low probability. Here and here, bad stop entry, 3 consecutive bear bars. Not great trading. It's a limit order market, breakout mode. But we probably will get a breakout up or down. Sideways, sideways, sideways. Here, is it a reasonable buy? Well, kind of, but you have the same issue you had over here. Tight channel, it's basically a micro channel, lowers the probability. You have a small bar, maybe, some bulls will buy, hopeful that we'll get this or this, but they'll be quick to exit. They know it's a low probability trade, and they want something to happen quickly. Weak doji, more dojis. All right, so I kind of forgot where I was. Big storm, had to keep up with it. But anyways, let me go back to where I was. Tight trading range. Tight trading range, breakout mode. Bulls want to get trend resumption up. Bears want to get trend resumption down from this. May test down to here. Tight trading range. Oh yeah, now I remember where I was. Yeah, so tight channel. It's one of those buys where the traders that are taking it know it's low probability, so they're going to be quick to get out. So if they buy above, that's disappointing. More disappointment, and boom. So bulls clearly giving up. When you see a bar like this, it's sell to close. Unless you get, even this bar, a bar like this still needs to be bigger. The odds, surprise bar, odds favor second leg down. Surprise, odds favor second leg up. So you have to think we may actually test down to here, and we may try to get all the way to the low of the day. But we'll see. Only an hour left. Strong follow through. So one thing to talk about that Al mentioned was strong breakout follow through. The odds are greatly reduced that it is a second leg trap. And normally if you get something like, just find one real quick. They're all over the place. Same thing here. Strong, you could argue second leg trap, but this is so big, it's probably not going to be a second leg trap. Kind of a small second leg trap. Leg 1, pullback leg 2. Here's kind of an example. Leg 1, pullback leg 2. But, bad follow through. So, if this bar would have been a big bar closing up to here, it would increase the likelihood of a second leg trap. But however, when you get a bar like that, traders are not going to exit above the bar. They expect a trading range. They know that we're probably going to have to go sideways. So now with that said though, some bulls will just get out. You have the bears that, now if I said bulls, I meant bears. Bears are short, they'll get out if there's a big bull bar closing on its high, but that's not a strong bar. And then when you get the micro double bottom, down, up, a lot of bulls will get out just because they expect sideways. But, not a great reason to buy, because now the odds greatly favor sideways because they didn't get the bulls did not get a strong buy signal bar, strong follow through bar after this. So strong enough to probably make the market at least have to go sideways. Just as this was strong enough that the market probably had to go sideways. And that was it for the day. So always in, bulls buy the close of bar 2, they buy above bar 1, don't get out. No, if you did get out for any reason, bulls buy again above this bar. Bulls probably get out 2, 3, 4, 5 ticks below this bar, maybe the close on this bar. Well, I just lost power for a few seconds. However, power's back on, so that's good. Kind of lost my focus for a second. But anyways, bears, bulls get out. Some aggressive bears sell, expecting a few legs down. Bears probably get out above this bar here. I would probably, if I was short, I'd probably get out above that bar. I would just stay away from that. Bulls can start buying again if they buy above here. Maybe their stops down here or here. Better to wait to buy above here. Second entry buy, micro double bottom, down, up, down, up.